What if I told you that Ethereum's current price of around $1,800 might only be the beginning? It sounds hard to believe. After all, Ethereum has been around for more than a decade. It powered the ICO boom, dominated NFTs, became the backbone of DeFi, and nearly reached $5,000 multiple times. For many investors, that looked like the peak. To them, Ethereum is simply another speculative asset that moves through endless boom and bust cycles. But some of Wall Street's biggest investors see something very different. They believe Ethereum is evolving beyond cryptocurrency. Instead of being just another digital asset, it is becoming the financial infrastructure of the internet, a platform where banks, asset managers, and technology companies are beginning to build real products and services. If that vision is correct, Ethereum may be entering a second chapter, much like Amazon after the launch of AWS or Nvidia, before the explosion of artificial intelligence. This is not a prediction that Ethereum will certainly reach $25,000 or even $250,000. It is an investment thesis based on one simple idea. As Ethereum's role in the global economy expands, its value could expand with it. So why are some of the world's largest financial institutions becoming increasingly interested in Ethereum? And what does artificial intelligence have to do with its future? Let's find out. Today's video is sponsored by MegaPro. MegaPro gives you cashback rewards from leading exchanges, exclusive promotions, powerful trading tools, and a growing crypto community, all in one place. Visit the website now to explore all the benefits and start maximizing every trade today. To understand this idea, we first need to look at how Ethereum has evolved over the past decade. For years, Ethereum's growth was driven almost entirely by the crypto industry. First came the ICO boom, then DeFi, then NFTs. More recently, ETFs and stablecoins. Each cycle attracted millions of new users and pushed Ethereum to higher valuations before another sharp correction followed. As a result, many investors still believe Ethereum is nothing more than a speculative asset. But according to many Wall Street analysts, that was only Ethereum's first chapter. What comes next is what they describe as Ethereum 2.0. Not a software upgrade, but a transformation in Ethereum's role within the global economy. If Ethereum 1.0 was powered by crypto investors, Ethereum 2.0 could be powered by banks, asset managers, financial institutions, and traditional businesses. The interesting part is that this shift is no longer just a theory. Over the past few years, some of the world's largest financial institutions have started building real products on Ethereum. BlackRock is expanding its tokenization initiatives. JPMorgan continues developing blockchain-based settlement systems. Meanwhile, companies like Coinbase and Kraken are investing heavily in Ethereum's Layer 2 ecosystem. Perhaps the most notable example is Robinhood. Instead of creating an entirely independent blockchain, Robinhood chose to build on Arbitrum, one of Ethereum's leading Layer 2 networks. That means many of the transactions users make will ultimately settle on Ethereum itself. More importantly, those transactions require ETH to pay network fees. That changes the entire investment story. In the past, most people bought ETH simply because they expected its price to rise. But if more businesses begin operating on Ethereum, demand for ETH will increasingly come from utility rather than speculation. Think of it this way: if a company wants to run its services on Ethereum, it needs ETH to keep those services running. If thousands of companies do the same, ETH gradually becomes more than an investment. It becomes an operational asset. This is why some analysts have started describing ETH as productive money, an asset that doesn't just store value, but actively powers an entire digital economy. That may be Ethereum's greatest advantage. Its value is determined not only by how many people want to buy it, but also by how many people actually need to use it. If banks were the only institutions adopting Ethereum, the story would already be compelling. But many analysts believe the biggest catalyst may come from an entirely different industry: artificial intelligence. Today, AI mainly helps people write content, generate images, or answer questions, but that's only the beginning. Over the next few years, many experts expect AI to evolve into autonomous AI agents capable of making decisions and completing tasks without constant human supervision. Imagine planning a vacation. Instead of spending hours comparing flights, hotels, and travel schedules yourself, you simply tell an AI, "I want to visit Japan next month with a budget of $2,000. The AI searches for the best options, compares prices, books the flights, pays for the reservations, and even rearranges the itinerary if something changes. At that point, AI is no longer just processing information. It is participating in the economy. And that is where blockchain becomes incredibly important. An AI agent cannot walk into a bank and open an account. It cannot wait several business days for an international wire transfer to clear. If millions of AI agents are operating around the clock, they will need a payment network that is always online, inexpensive to use, and accessible from anywhere in the world. Those are exactly the kinds of problems blockchain is designed to solve, especially networks like Ethereum and its Layer 2 ecosystem. In other words, if the internet connected people, blockchain could connect the economy of intelligent machines. This is why many investors no longer see AI and crypto as two separate trends. They believe they are complementary technologies. AI creates demand for autonomous transactions. Blockchain provides the infrastructure that makes those transactions possible. If that future becomes reality, Ethereum won't simply support millions of human users. It could eventually process billions of transactions initiated by AI systems every single day. This is where many investors make an interesting comparison. They don't compare Ethereum to Bitcoin. They compare Ethereum to Amazon. In the early 2000s, most people saw Amazon as nothing more than an online bookstore. Later, it became an e-commerce giant. But the company's biggest transformation came from something very few people expected: Amazon Web Services. Originally, AWS was built to support Amazon's own operations. Over time, it evolved into the world's leading cloud computing platform. Today, millions of websites, applications, and businesses rely on AWS every single day. And here's the important part. A significant portion of Amazon's profits now comes from providing infrastructure, not selling products online. Some investors believe Ethereum is following a similar path. Today, many people still think of ETH as just another cryptocurrency. But if more financial platforms, AI applications, games, social networks, and tokenized assets are built on Ethereum, then Ethereum's greatest value may not come from the token itself. It may come from becoming the infrastructure that powers an entire digital economy. That is why many analysts are asking a different question. Instead of asking how many people will buy Ethereum, they ask how many businesses will build on Ethereum over the next decade. If the answer is thousands or even tens of thousands, demand for ETH could grow alongside the expansion of that ecosystem. And that is the foundation of the Ethereum 2.0 investment thesis: growth driven not by speculation alone, but by real economic activity taking place on the network. Of course, none of this guarantees that Ethereum will succeed. Technology history is filled with companies that once looked unstoppable but eventually disappeared. Ethereum still faces significant challenges. Competition from other blockchains continues to grow. Regulations may change. Scalability must continue improving. And there is no guarantee that every financial institution will choose Ethereum as its preferred platform. Those are real risks that every investor should understand. But just like the internet in the late 1990s, the most important question wasn't which company would win. It was whether an entirely new digital infrastructure was being built. If blockchain becomes the foundation of digital finance, if real-world assets continue moving on-chain, and if autonomous AI agents begin transacting with one another every day, then the demand for secure, decentralized settlement networks could become far greater than it is today. That is why many investors no longer value Ethereum as just another cryptocurrency. They increasingly see it as a technology platform, a financial infrastructure, perhaps even the operating system of the future digital economy. They could be right, they could be completely wrong, but one fact is difficult to ignore. For the first time in history, the world's largest banks, institutional investors, and technology companies are all paying serious attention to the same blockchain network. So perhaps the most important question is no longer, how high can Ethereum's price go? Instead, it is this: if Ethereum truly becomes the infrastructure of the digital economy, is today's valuation actually pricing in its future potential? The answer will likely be written over the next decade.